Hello guys, welcome to my channel. This is FX Mesh Smashing It. I'm coming back again to you, and this is my Forex weekly forecast, Forex and Indices weekly forecast, and I'll be explaining to you what happened during the week and what we're going to expect. Now, let's go over to the chart to see how it went this week. Back to my chart. This is NZD USD, which I took yesterday. Today is Saturday, the 11th of June 2022. Yeah, and this is New Zealand time. So I've got NZD USD. I entered yesterday, and the trade went very well. You can see that I took a position here, and the reason why I took this position here was that I was trying to be conservative with the account I was trading. What happened was that I took a position as a result of the fact that I had to first of all study the overall bearish position of this particular trend. As you can see on the 4 hours time frame, the market has been pushing to the downside and creating lower highs and lower lows, lower highs, lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows, and just like that. And got to this point, and you can see a very steep bearish or downward trend to the downside. And what I did was to allow the market to play out after hitting this level. So what the market did was to, since I had in mind that the market was going bearish still, so I waited to see if it's going to reverse to the upside. So what it did was that it went up here and gave me a sign of continuation. So what I did was to use my Fibonacci retracement, and I drew my Fib retracement. I drew it from here, I drew it down here. Okay, so I'm going to delete this one and show you what I did. I use my Fib. Now Fib retracement tools is used to, you see it, I hold it from here and I drag it down to the next point. Now Fib is always used for trends. Now this is the trend. This is the trend. So every trend, if you want to test, if you want to know when, where possible, the market could reverse, it's always good to use a Fib tools. Now I'm not going to be explaining too deep about Fib tools here, but I'm going to just show you how I applied it. Now I used it. It's only used on a trend, like I said. Now, if since we have this market pulling to the downside with a significant impulse like this, so what you want to do is to use a Fib. You start from here and you drag it down to this point. Now what I'm looking for is if I see reversals at 3 points, either have the 3 points, either we have reversals at 0.38. It's not too clear here. 0.38 is in green. Let me make it bigger a little bit. I'll just expand the screen a little bit. Yeah, you can see here I watch for 3 regions. Now if the market I took a Fib all through here, then it pulled back like this and showed me the sign that's going to continue on the trend. So I saw that the trend pulled back around this region. What we have here is 0.382. Now I watch for the market to react around 0.382 or 0.50, 0.50 or 0.61. So 3 points I look out for. These points 6.18, 0.5 and 0.236. So what happened was that in the region of 0.236, this region 0.236 region. So what the market did was that it reversed around this area, which is okay, and as it was coming back, I took a sell. But what I did before I took a sell, I drew this counter trend line. So the reason why I drew this counter trend line was that once the market breaks through it, then I take a sell. So, and I took a sell from there, NZD USD, and I was able to my stop loss was somewhere. I didn't put stop loss actually, because I wanted to see how the market reacts. So my stop loss was kind of something like that. So my stop loss was sort of was actually open. So let me just put it here. So I only put my take profit to be at 0.61. Okay, I put my stop loss was 0.61. So, and it came down and melted in profit. And let's go to the MT4, and this is a $1,500 US account. It's a real account. As you can see here, you see, so NZD USD. Now let's go to 15 minutes time frame. You can see I took my position from this region. This is the trend line, then came down, and then I was able to take the position there, and you can see that I was in profit there. So I stopped here, then the market was just going down and all that. So I was very cautious in this particular trade because I didn't want to today it was Friday. I don't like taking too much trades on Friday. Friday is always a little bit tricky. So but what I did was to ensure that I have different confluences aligning itself. First of all, I must identify the trend. So it was a bearish trend, so look, it means I was looking for trading opportunities in the bearish direction. One. Secondly, there was a break and retest of a certain level. As the market came down, it broke this level and retested this level and pushed the downside. This push, I wanted to see if there was continuation in the bearish direction. That's where this area explains what I have in this area. So break, retest of this level. It's quite big. Okay, see, break, retest of this level, then push it to the downside. Now the push to the downside, I wanted to confirm it. I used the Freeb level from I used the Freeb to check reversals, and it worked out very fine. So that's what I was able to do. I'm not really explaining it fully, but I'm just trying to explain what happened in the past. Now that's for NZD USD. So overall, you can see that the market actually demonstrated that USD gained more strength, further strength in this week. And also, I can also go back to the fact that we can check fundamentals and see what actually happened. Because see that we had USD. See, we had USD events here. This is Saturday, June 11, 2022. This is also Friday in another part of the world behind us, and that's America and other places now. So this all, if you look at this the result here, you can see that on the high volatility news, USD high volatility news is this one, because it has 3 stars. So you look out for the 3 stars news, and you can see core CPI for USD. So this was previously 0.6%, and actual, these are the news that we're looking at for. So what happened from 0.6 to what 0.6? So the market didn't change. Now look at other ones. You can see that this one kind of reduced. So this one kind of reduced 6.2 to 6.0 USD per core CPI. So we don't really look at those ones as such. Now we look at the one that has stars. Look at all the US pairs. You can see all the US pairs, and all these US pairs, you look for this one that has more stars. So this one was stable, 0.6, 0.6. So then CPI increased for the year May, 8.6, 0.3. So if CPI increases, USD increases as well. So that's what also was in line with my trading. So USD gained more strength, so it will push to the downside. So that's what we are and that's what how I was able to manage that trade. I didn't go too far. I didn't want to, push too much far to the end to this point, but I tried to take my profit here and just relax because it was Friday. Now going forward, what are the possibilities that we're going to be looking out for? Now we have to go back to 4 hours. This is 4 hours time frame, or let's say 1 day time frame. So let us try and see the market from a very big picture and see what we might actually encounter in the next week. For the next week will be 20th of June. 13th of June to 17th of June. So what we are expecting is that now we need to first of all know where the market is. The market is here, and we have a bearish trend in mind, which is good. So what I'm expecting is that the market is at the middle of two key levels, here and here. So what we're going to allow the market to do is to allow the market to play out. Since it's still on a bearish trend, I'm expecting the market to come down, retest this level. Then what I'm going to do is that I'm going to be using a Fibonacci retracement to measure the distance between here and here to find the possible entry for the market. That is where I'm going to stop for this particular market. So now I've cleaned everything. Now you can see the market very well, very clean, straight market. Now going further, this is what I'm going to be doing. I'm going to first of all make it very clear to everybody that's watching me. I would like to, go to a weekly time frame first of all. And try to identify the key levels. Let's see, the market is a little bit choppy, sort of, but on the weekly time frame is a little choppy. So let's bring it down at this point. Okay, I'm using this as my reference of my topmost height in this region. This part is more important to me than this part, but they are also in line since the market has rejected this many times. So it must be a key level. You can see a lot of multiple rejections here and here as well. Then for the support, we can have something like this. Okay, something like this. But we're paying attention to this area. So now what we can see is that, as far as we're concerned, from this point from the 22nd of February 2021, there have been a significant push to the downside. So NZD USD have been pushing to the downside. Now let's go over to the daily time frame. And the daily time frame is showing that showing a bearish sign. So what we'll do is to put after doing our support and resistance, our resistance and support, we draw a trend line to show exactly where is the market going to, because we want to know where exactly the trend of the market is, and that's the trend line there, pushing to the downside, is bearish in nature. So what we want to do is to come closer, so you can see. So if you look at it very well, the market has a structure here and it pushed to the upside. It broke the structure. This is the structure. So this is the structure. I drew it further. Okay. Now the market came up, we tested the structure. Market came up here, it broke the structure, it retested the structure, retested the structure here, and it's pushing to the downside. Now this market is already headed to the next key level. So we don't know where this market is going to go to, but one thing I've observed about trading is that when you are trading, you always try to open your mind, because when you open your mind, you have different possibilities and different ways to look at the markets. Right now, all mathematically, we can just say, oh, the market is it has already broken this level and retested this level. Now we expect to push to the downside to the next support level, but sometimes it doesn't go that way. So what I intend to do, or I always do, is that I always take whatever the market gives me and I close my trade. I don't want to risk too much. I don't want to take too much risk. I just want to take it at the moment, and I never leave money on the table. So now, but since having in mind that the overall trend on the 4 hours is bearish. So what we want to do is we're going to look for more selling position. So I'm expecting that the market is going to push more to the downside and hit this level. But before you hit this level, there's going to be some break and retest and pullback and testing of levels. So what I'm going to do is that I'm still going to be watching it. But what I've been able to do now is to use a free binary retracement tool. I'll draw from here to this point. Okay, then I can see that the market has pulled back. This is what I did yesterday, and I made some profit, but I jumped out. So it has pulled back to what? 0.382. So it pulled back to, it tested 0.382, and it's pushing down to the downside, and it's expected to push further down. So I can even still take a trade from this point, and for next week, this for next week, this can be my take profit. TP1, my TP1 here, TP1 here, then my TP2 could be here, it could be here. So I can look behind and draw another because there's a reaction here. There was a kind of is a reaction here, so I can also draw a level here as well. Okay, and I expect the market to, after testing, this is my TP1, then my TP2 is down. TP1, that's my take profit 1, and my take profit 2 here as well. Could be here. I'm just putting, that's what I'm think, that's my expectations. But I've traded the market so much that I know that this market could go up. It could just, USD can just become weak and it just start going up, because we don't have control over the market, but we can only make analysis that can give us an edge in the market. Now that's for NZD USD. This is what I expect in the coming week. Now for GBP USD, I used a different approach to solving how the market went, and I used a multi-frame analysis. I won't be going into that today, but I can just explain a little bit and tell you how I went about it. For the 4 hours time frame, yet what I did was that, first of all, I will just write a list of what I did here. First of all, what I did was I'll just put a note. First of all, I identified the lows and highs of the week, the previous week. 2, I identified the directional candlestick to know whether I'll be having more sales or many more buys. So it's a particular candlestick that I will need to have on a 4 hour. All these things are on the 4 hours for me to know what direction the market will go more in this week, in the week. So 3, I'll scale down to my entry will be on the 15 minutes time frame, and I'll also 3 will be to draw psychological levels and trend lines. Then 4 will now be to enter on the 15 minutes time frame and look out for double tops and double bottoms. Entry using looking out for confluences. So this is what I used to trade the GBP USD, and it actually worked out fine. These are the key elements in my analysis, and the analysis will require a lot of lines have to meet and all that. I'll just explain it quickly, and I'll bring this down so you can see what I mean. Now, first of all, I will take this Fibonacci out of here, make it very clean, and tell you what I did in the past. You can see this one is a profit. I entered a profit. I think I made some. I think I just tested it a little bit with real accounts. I think I made $40 there or something like that. I can't remember again. Yeah, then okay. Now, first of all, I went on the 4 hours time frame. Okay, then I identified it on the 4 hours time frame. Forget about all this. Just follow what I'm just saying. Forget about these lines. It's very confusing. I went on the 4 hours time frame first. Then secondly, what I did was to identify the week started on the 6th. So how do let us separate the days in the week. You go to settings. First of all, you right click on the screen. You go to settings on trading view, click appearance, then look for section break. Click section break. Okay, you'll see lines that are separating the days. Okay, now this is one day, it's another day, another day, another day, another day. Now on the 6th was when the week started. This Monday, Tuesday, Wednesday, Thursday, Friday. It's Friday now. Well, it's Saturday here anyway, but in other part of the world, most part of the world is Friday. So the week started here. So what do you do first? You identify the lows and the highs of the week. How do you do that? You go here. You see this candlestick here. You see this line here. It starts the week Monday. That was the beginning of this week. So what I did was that this candlestick was the first candlestick, a 4 hours candlestick on what? On Monday this week. You draw a line on top of it, green line. That's what I did. So I put what as, and I say high of the week. You can see it here, high of the week. I put on top of it after drawing this green thick red line. Then secondly, I waited for the market to play out, and when it played out, the second candlestick was what was low here. So I drew a line here. So I have two parallel horizontal lines to identify the high and the low of the week. Okay, then what I did was, now the next thing is to identify the directional candle, and the directional candlestick is the candlestick that tells me where there will be, at least to some extent, on an average, a significant amount of buys or sells for the week. So how do you know? Once you see a candlestick break out from whichever of these two horizontal lines, then that will be most likely where there will be more sales. Now look at this candlestick here. It came out here. I waited patiently. It came out here. The following day, this is 6th, this is 7th, around in the middle of the day, afternoon, maybe it was during the Asian session, then this particular candlestick pushed out. So this candlestick identified that there will be more sales, and if you look at it, there will be more sales in the week. There were more buys in the week. It's more buy because it broke to the upside, so there were more buys in the week. So anything above, any sales above this line will be more of buys of the week. Now the next thing was to draw psychological levels. Now psychological levels are levels that are rounded up. For example, now 1.25,000 is psychological level. 1.25210, those rounded up figures are psychological level. There's one here, psychological level here, 1.2460. So you draw horizontal psychological levels. So that's what I did. Now the next thing is to draw trend lines. How do you draw your trend lines? I'm following what is here, trend lines. Now you look at the market and say, okay, initially all these ones have not been developed. I was still in the first day. So I tried to build trend lines from on top here. Your trend lines are such that 2 points must meet. When you're drawing a line, make sure 2 points meet. So I drew from here, I drew a line. Here meets. That was before 6th. So I drew this one down and all that. Then as the week started to run out, and I begin to identify different trading opportunities, and I step down to what 15 minutes time frame. That's the next thing to do. So this is what I've written now. Okay, now let's see, where is our 6th? Okay, this is where I started the week from, 6th. So the market started to build up and down, and now the first opportunity was here, this one here. I think I used my demo, so I was trying to test it. Yeah, then what I did was that once you see, anytime you see the psychological levels are the horizontal levels, right? I made them thin. Then I also have highs of the week and low of the week, as I explained. Now as the market starts to unfold, once you see where price, where trend line meets the psychological levels, then you know that that's an opportunity. For example, now this is the beginning of the month of the week. Look at the market. The price went up like this. Look at this point. Look at this point here. Psychological level meeting with what trend line. Then as the market was here, it came down here, it hit here again. Because when psychological level meets with trend lines and you have a double top shape like this, one hit here, two, I took a sell here. You can see that is a sell here. You can see a sell here. Let me try and zoom it out. It's a little bit. You see it M. Market came here, I waited. Hit here, I waited. It hit here again. As soon as it was coming down, I just bought. I just sold. Rather, I sold and I ate this one. Okay, this technique is very good because it helps you to open multiple positions and it gives you more accuracy in and know where the market is going to. Then I won that one, my demo. I don't know if I still have it on my. I don't know if I still have it on my this thing. I don't know if I have it. I'll still check. I'll try and check and see. I'll try and check and see. I don't know if I still have that. I'm just trying to check and see how. I want to just GBP USD. I think so. That was only okay. Monday. That's Monday. I think it's Monday. Let's see. See, I tested it with 1.25. I think I tested it with this one. You can see this result. So I think I tested with this one. If I can remember, I took this GBP USD sell. This is a demo account. I used a big lot size, and you can see how much I got there. Then I think I entered more positions as well. I was just testing and seeing how the this multi-time frame works. Then I also tried it later on my real account as well. So yeah, so definitely it's finding yourself in the right side of the market that's the most important thing. Then let's see, yeah, so yeah, so yeah, pretty much I took some screenshots of let's see if I was, let's see, this one is let's see on the, you see I took a screenshot of how I went 6th. You see, I allowed the market to push to the upside, right? Then once it forms a double top, see, first top, second top, as you see, once it hits the top second time as it's pushing down, you buy, you just take a sell there, then you stop there. That's all. You can even stack here. You can take, like, let's say you have $1,000 account. You can put like 0.02, enter one trade 0.02 at lot size 0.02. You can do like 5 of there. Then you put your take profit and jump out of there. Then it came down again like that. This one, I missed this one because I was thinking that the market is going to go up here. It's going to go up, but I missed this one. I thought it's going to come up here because they say the trend line and there are two trend lines that's meeting here. Once lines meet, there's always opportunities there. That's how I find my opportunities here. Then this ones, I think I was busy. I couldn't take any trade. I let market go up. Then I drew this point because I saw it's a psychological level here, and also this line cutting across here. So I felt that around this region there's going to be a reaction there. So the market came up, and you can see double top again, hit here, came down, hit here, came down. I took a position here, and I got this one. Then this one pushed to the downside, and then I think I also, I don't know what happened here now. Let's see. That's a picture, but I'll see how it goes. So just like that, just like that, just like that. So it's quite a simple. It can be confusing to explain because there's so many things involved. But once trend lines meet and there's double top or double bottoms, then it gives you a very good opportunity. I've been trying to test this strategy for like 2 weeks now, and it has been working very fine. And I intend to also use it to grow small accounts. But there's a small account I have, but the leverage, I've not talked about leverage before, but I'll try and look forward to teaching how to use leverage and how to use lot size and account management. But for now, I'm just showing the analysis and how it went out, how it played out for GBP USD. Now you can see this one. Now what happened here was as the market came up here, that double top I talked about just now, the market came down. After that, I got that one, I came down, pushed the downside. Then when it hits here, you can see that when the market came down here, we are always looking for double tops. We're looking for bounces or reversals. Always looking for bounces or reversals. Looking for bounces or reversals. See, and once you see any sharp touch like this, there's always reversals. Always reversals. See, follow my direction from here. Hit here. Oh. From here, hit here. See it? Hit here. It came down, played around a little bit, then pushed down. Anyway, still got it anyway. Then another one again from here. Reversals here. Now the reason why am I taking a reversal? Why am I taking a trade here up? Buy after hitting here, because look at this trend line. This blue line. This blue line is meeting this high of the week. This high of the week that I drew before initially. So this high of the week is a key level. So once the market, once trend line crosses it, then it's a point for you to enter. After this one has come down, it will be going back and it went up. You see, clean trade. This is a very beautiful trade here. Push to the upside, then it bounced down again. You can see there's another opportunity here, but I didn't take it. Now double tops and double bottoms. Look at bottom here, one, another one here again. Then you take a buy. I didn't take a buy here. I just took this one. I didn't take this one. I think I was busy somewhere doing other things. I think I was at work or something like that. So down here, then like see, double tops all over the place. It hit here. It came up here. I took a wonderful sell here, and look at it. I put my stop loss here, far away, and I just rolled it down like that and take profit. I put my take profit here. I didn't want to be greedy because I was trying to be conservative. And look at what happened. I stopped here. This is my take profit here, and the market still, you see. So that's how you use this one. Then it started to go down. It started to go down. Started going down. Started going down. Down. Then at this area, I did not trade again. Look at what I missed. But I would have, if I had entered here, push the downside, went up here, there was something happening around here. I was not focusing on GBP USD. I was focusing on NZD USD. I did something. That was where I had to use the break and retest and the free time. I just forgot about this one because I didn't want to pursue too many things. So now I've explained NZD USD and GBP USD. Now overall, what has the USD been able to do? The USD has been able to gain more strength. And from the look of things, as from the way the analysis has played out, USD appears to want to push more to the downside, meaning that USD will still be gaining more strength. Now, let's look at the dollar index before we go to some few indices, then we'll wrap it up. Now, if you look at the dollar index, you will understand that in the previous week was what? 6th. See, I still use the same analysis here as well. You understand that the market, as the dollar index, is the comparison of the strength of US dollars to other major currencies, other food baskets of all the major currencies, like US dollar to New Zealand dollars, US dollars to Australian dollars, US dollars to Great Britain pounds, US dollars to Japanese yen, US dollars to all those major currencies. The strength of the US dollar to all these major currencies is what is the dollar index. I always look at the dollar index because the dollar index gives me the overall strength of how the US dollar is performing with regards to other major currencies. You can see a push to the upside. What does this signify? It signifies that the US dollar has been gaining strength, and this week we are in started from the 6th, and you can see that the market is what pushing to the upside and like that, and the dollar has actually gained enough strength. So that's it. Now let's just take a peep on gold and see how gold has performed. Now gold, what I did was that I didn't trade gold actually, but I was just testing and seeing what happened. This is very simple trading technique. I will explain it here. Now, because of the attitude of gold, because of the volatile nature of gold, what I've done is that I trade gold on 15 minutes time frame sometimes, and I will just explain this fast and explain and tell you what I think is going to happen going forward. Now, what happened was that if you look at this market, gold has been on a bearish trend. I will explain. I'll remove the sectional break. Now, gold has been on a bearish trend since the Ukraine and Russia war. Around this point was when the war started, and after that, I think the gold started pushing to the downside. Then it consolidated a little bit. It went up. Then at this point, 1994. Then from here, it started pushing down. Now, if you look at this thing very well, it created a support here and the resistance here. What I did was that I zoomed for 24 hours, which I've showed you now, which we are on now. You can see a clear trend pushing to the downside. I just draw a trend line to identify or to signify the trend, then waited for the market to break it. The market broke it, and you know what the market was doing? It was consolidating. I want to remove this one. Take this one out first. So it was consolidating. Now, I can as well use a fib level here to identify the point where I think the market might. Now, what am I seeing? The market is playing around here. It came here, push to the downside. If I'd after drawing this trend line, when the market broke it, I will be expecting for the market to react to either these three levels, like I explained before. That when you're using a fib level, you are checking for 3 points where the market can reverse, and the 3 points are 0.618, 0.50, and 0.382. These 3 points. Now the market reacted to one of them and turned to the downside. Now, in my mind, let's assume this part has not formed yet. I will expect the market to push more to the downside based on the free explanation. But what did the market do? The market has been playing around that key level. See, it came down, came up again to the same key level, respected this level, it pushed to the downside, went up again to this key level. So what is market doing? The market is consolidating. It's consolidating. So if it's consolidating, you leave it alone. Leave it alone. So if you want to, if on a 4 hours time frame, you have to leave it alone. But if you want to really understand what is really going on, I would rather you go on a lower time frame, like 30 minutes, and see exactly what's going on. You go closer into the market to see, you expand it, and when you expand it, that particular consolidation can create you more opportunities. So what do? You zoom like I'm doing, you draw a trend line to know exactly where is the market headed. Okay, when you draw a trend line, The market has broken to the upside. Remember, always use FRIB for impulses. Now there's an impulse here, a clean push to the upside. What happens next? So you wait for the market to play out next week. If the market comes here, let's say comes here like this, for example, you can come here and test this level. You can come here and see, oh, for example, what you just do is you just draw a line to respect that level, put it out as a structure, which is a structure. If the market, then you now use your FRIB level. I'm teaching and at the same time just explaining what I think the market might do. You push this to the upside here. This is a perfect, if the market comes down and begin to show sign of pullback and it goes up to a certain level, what I would do is to draw a counter trend to count to across like this. Once the market breaks this line, I'll take a buy. That's what I think I'm going to be doing in the coming take a buy. Look to the left to see if there's any structure here. There's a structure here, so I will draw a line. Yeah, I'm just anticipating what I think is going to happen next week. Okay, this video is getting too long. Then I'll take it. As I draw this line here, this line here, after the market has reversed, pulled back, then that's a sign that it's going to go bullish. So I'm going to be looking at, I'm going to put this one in my journal, gold. I will be looking at gold in the coming week. Now let's just go to the indices. Now we have 3 indices here we usually look at all the time. Now DXY is an indices actually, but we didn't do analysis there. So let's just pretty much let's just go to NAS 100. Now NAS 100, how did it perform last week? Last 100 has been now the week started on the, let's see, sectional break. See, so these are days. This Friday, Thursday, Wednesday, Tuesday, Monday. So Monday, the week started here. You can see that NAS has been consolidating. So you can see that the trend line can show that from 6th it has been consolidating. So that was the direction. So it's more of sell now. So then I drew this line from up down here. Okay, let's forget about this line here for now. Then what do we look out for now? Because it's consolidating, we can look for opportunities. Okay, if for example now we want to find, okay, let's find opportunities here. Now in the past, if I didn't trade NAS 100, but I want to use FRIB to identify where I think I'm going to enter the trade. Now the market went up here, it pushed up, then pushed to the downside. I want to take it from 6th. Now before 6th, between that was Friday 2 weeks ago. If I take my FRIB from here to this point, I bring it down here, you now check next, where did the market react? First of all, you draw your FRIB from this point to this point. It must always be on a trend. This is a bearish trend. I'm just starting the explanation from here. To draw your FRIB, you are looking for what? Looking for where the market is going to head and it's going to head next. You wait, and the market went up, and it reacted at what? Between 0.78 and 0.61, which is good, and turned to this side. As soon as you see a red candlestick, then you draw your counter trend line from that point. You know your FRIB came like this, down like this. Draw your FRIB, your counter trend line to this line. Just draw it, line, just anywhere, just somewhere, like just slightly. Once the market breaks through this counter trend line, take a sell. That's how, and this thing works for me. Then put your what? Put your your take profit. Maybe you can put it here, and that's it. Then put your this thing here somehow. Risk 1 to 3 risk reward. That's how to trade. You'll be in the right side of the market when you do this. Most of the time you'll be right. Now, going over to what we think is going to happen in what the market is might likely do. We don't know what the market is going to do. There's a consolidation here. What I'm expecting is that the market would want to, it's already reacting here because there's already a rejection here, a lot of rejection here. So if you have rejection here, it means this one is reacting to the prices that are here. So let me draw a thin line on top here, because there have been a lot of rejection there, a lot of times. The rejection there, another one here again as well. Okay, now the market's at the middle here. So what do we expect? We expect the market to pull back to this line. We're expecting to pull back to this line before trying to make its way to the downside. But what I will do is to wait for the market to push to the upside. Once I see that it's the sign of it pushing downwards, I will do my free test with my free tools. I'll take it from here. I'll draw it down here. Once it's reacting to this point, I'll look for where it's reacting. Once it's reacting to this point and it confirms this point, I will draw my counter trend line. Once it crosses this trend line, I take a sell. That's what I expect. So I'm going to be looking out for NAS 100 in that regard. Now let's go over to US 30. US 30, same thing, because they are all correlated pairs. So you can even identify the market. You can even draw this one like this. But this shows that the market is pushing. The market was pushing to the upside, then consolidated and pushed to the downside. The same thing like NAS 100, US 30. We're waiting for the market to come to this level, or come up here, push to the downside, to reverse, to retest and reverse. Then I use my Fibonacci to, just like what I did before, I can take my free from here to this point. Look at where the market is going to react. It could react, it could hit here, it could hit whichever. If it does not react in between these three levels, 0.618, 0.50 and 0.382, I will not take any trade. I will leave the trade. But if it does, you know what to do, as I explained before. Once it reacts around these points, any of these points, then I'll draw my counter trend line and take my sell. So now for German 30, which is going to be the last one we're going to look at, the same thing too. You can see that all these pairs are correlated pairs, means that they react similarly. So I'll wait for the market to pull back, let's say here or here or whatever. Let's say pull back here, goes up, then it kind of pull back somehow. Then I'll take my free level here, from here, push it downside. Once I see market reacting around this area, then I draw my free line to this structure here. Then once it crosses this line, I take a sell. So this has actually played out for me, and I'm looking forward to making more profits in the coming weeks. This is FX Mesh smashing it. If you like what I'm about, please like, subscribe and share. Catch you in the next one. Peace out.